In the volatile landscape of 2023, where economic uncertainties loom large, three stalwarts in the consumer goods sector stand tall: the Hershey Company, Procter & Gamble, and PepsiCo. Despite the challenges presented by a weak consumer sentiment and recession fears, these companies have proven to be resilient, offering stability that investors covet in turbulent times. Let's dissect the numbers and delve into the intricate details that shape the narratives of these corporations. The Hershey Company. The chocolate giant, Hershey, has seen a bumpy ride in the market, witnessing a staggering 20% decline year to date. However, this setback has not shaken its reputation for stability, especially in times of economic downturns. A closer look at the valuation metrics reveals a notable descent since May, with the current P/E ratio standing at 18.5 times, down from 28.1 times earlier in the year. The market cap, though, remains substantial at $37.27 billion. Amidst the tumult, Hershey displays promising signs on the earnings front, with EPS estimates projecting a robust 5-year growth rate of 88.3% for the next 12 months. The dividend yield stands at a respectable 2.62%, boasting an annualized growth of a staggering 99.44% over the past decade. Analysts seem optimistic, setting a price target of $212 for the coming year. However, challenges lurk in the shadows. The impact of increased commodity prices, particularly cocoa, has raised eyebrows. A short report hinting at heightened competition has surfaced, though skepticism about a significant impact prevails. Hershey, despite its sweet legacy, finds itself navigating through a landscape marred by inflation affecting key ingredients. Procter & Gamble. Procter & Gamble, a household name in essential products spanning baby care, fabric care, and family care, has weathered the storm more gracefully. With a market cap of $44.5 billion, the company has seen a marginal dip of just 1.11% year to date, underscoring its resilience in a challenging market. The dividend yield for Procter & Gamble stands at 2.57%, with estimated EPS 5-year growth hovering at a commendable 7.89%. The company has demonstrated consistent dividend growth, with an annualized rate of 4.77% over the past decade. Analysts project a target price of $164 in the next 12 months. Procter & Gamble, like its counterparts, faces the headwinds of a weak consumer and recessionary fears. The challenge of inflation impacting raw materials is omnipresent, adding a layer of complexity to the company's strategic decisions. PepsiCo. PepsiCo, a diversified behemoth with products ranging from snacks to soda drinks, has a market cap close to $35 billion. While the company has witnessed a 3.8% decline year to date, its diversified portfolio positions it as a recession-resistant player in the market. With a dividend yield of 3%, PepsiCo projects an estimated EPS 5-year growth rate of 8.42%. The annualized dividend growth over the past 10 years is an impressive 8.13%. Analysts eye a price target of $188 in the next 12 months, reflecting cautious optimism. The challenges for PepsiCo echo those of its peers. The impact of increased commodity prices, notably in ingredients like sugar, adds pressure. However, the company's resilience lies in its ability to offer a broad spectrum of products, catering to varied consumer preferences. Common themes. Despite the hurdles, common themes emerge across these companies. They belong to a sector significantly impacted in 2023 due to a weakened consumer and recession fears. Inflation, especially affecting key ingredients like sugar and cacao, poses challenges. However, the risk-reward ratio is deemed favorable for these stalwart companies in 2024. The products offered by Hershey, Procter & Gamble, and PepsiCo are considered essential and recession-resistant, providing a shield against the economic storm. The consumer goods sector, despite its share of challenges, stands as a bastion of stability, attracting investors seeking refuge in turbulent times. Market factors. A closer examination of market factors reveals the ripple effects of increased commodity prices, particularly in the cocoa market, impacting companies like Hershey. The mention of a short report brings competition into the spotlight, although skepticism prevails regarding its substantial impact. The consumer goods sector grapples with the reality of shrinkflation, a trend where products may become smaller but more expensive. This dynamic challenges companies to navigate pricing strategies in a way that maintains consumer trust and loyalty. Yet, despite these challenges, the overarching sentiment is one of resilience. Consumer trends. Consumer trends offer a nuanced perspective on the industry's dynamics. The potential trend of shrinkflation raises questions about consumer acceptance and market dynamics. Are consumers willing to pay more for smaller products, or does this shift in packaging sizes risk alienating a price-sensitive market? Another trend on the horizon is the increasing health consciousness of consumers. However, there's no indication that this trend negatively affects companies like PepsiCo. Perhaps the diversification of PepsiCo's product portfolio, including healthier snack options, positions it favorably amidst evolving consumer preferences. Conclusion. In conclusion, these companies, despite the tempestuous market conditions, stand as pillars of stability. The emphasis on long-term value and stability is evident, making them attractive options for investors looking beyond short-term market fluctuations. The recommendation echoes a resounding hold for these dividend-paying giants. Their ability to weather economic storms, coupled with consistent dividend growth, positions them as reliable long-term investments. In a market fraught with uncertainties, the consumer goods sector, through the lens of Hershey, Procter & Gamble, and PepsiCo, emerges as a beacon of stability. Comparison: PepsiCo versus Coca-Cola. A brief but insightful comparison between PepsiCo and Coca-Cola highlights PepsiCo's strategic advantage in diversification. While both companies grapple with the impact of a weak consumer and inflation, PepsiCo's foray into snacks provides a layer of resilience. This diversification shields PepsiCo from over-reliance on a single product category, a strategic move that has positioned it as a formidable player in the market. In the chessboard of consumer goods, each move is calculated, and the pieces are positioned strategically to weather the storms and emerge victorious in the long run. As investors navigate through the market complexities of 2023, Hershey, Procter & Gamble, and PepsiCo beckon as reliable anchors in the turbulent sea of economic uncertainties. Please consider liking, subscribing, and sharing with friends to support our content. The information is for general purposes. Viewers should conduct research and consult professionals for financial decisions.